Thank you, really appreciate it. Thanks everyone for being part of this panel, Fireside Chat. I want to make it loose, but high impact for you guys. I know having some cocktails and a good time. If there's any questions during and at the end, we're happy to pass the mic around. But we want to have a conversation, kind of like we always do, down in the lobby bar, just talking about crypto and cloud. We end up talking about cloud computing and crypto a lot because those are two areas that are kind of converging and the purpose of this event. So we really wanted to share some thoughts around those two massively growing markets. One is already growing, is continuing to be great. The cloud and blockchain certainly is changing everything. These are two important topics. I want to flesh them out. Al Burgio is the serial entrepreneur and founder of Digital Bits. He's founded companies both in cloud and blockchain, so he brings a great perspective. And Matt Roszak, leading crypto investor, entrepreneur, and advocate, well known in the crypto space, going way back. I think he gave a couple of Bitcoins to some very famous people early on. We'll get into that a little bit later. So guys, thanks for being part of the panel on Fireside. First question is, we know how big the money is. I mean, the money in crypto is flowing around the world. In cloud computing, we've seen specifically, and certainly the coverage now with Amazon's success, Amazon Web Services, and Microsoft and others, trillions of dollars being disrupted in the traditional the enterprise and data center area. And blockchain is doing that too. So we want to get into that. Well, first, before we get into it, I want you guys to take a minute to explain for the folks, just to set the context, the kinds of projects you're working on now. Al, you have Digital Bits, and Matt, you're investing, and you're providing a lot of interesting token dynamics. So let's take a minute. I'll start.
Thanks, John. Want to hear me okay? All right, perfect. Well, thanks for that lovely intro. So my name is Al Burgio. I'm founded a few companies, as John mentioned. Before the cloud, there was the internet. And so it started for me in the late 90s in the e-commerce era. But more recently, I pioneered what's known as Interconnection 2.0, and I did that with a company called Console. And it was, for those that may know, PCCW. Recently, it was acquired by PCCW. And with that, we disrupted the way networks at the core of the internet connected together. More recently, I founded the Digital Bits project, and now the Digital Bits blockchain network. And with that, you can kind of think of that as the trading and transaction layer for the points economy and other digital assets. And you can do a lot of interesting things with that. It's really about bringing blockchain to the masses. So.
And what are you working on?
So Matthew Roszak, co-founder and chairman of Block. Block is a enterprise software company. We do two things. The premise is the tokenization of things. We think the money, identity, new layers of the internet are going to be tokenized, and so we go to market in two ways. One is through Block Enterprise, and these are all the software layers you need to connect to tokenized networks. So think a wallet, a node, a router, etc. And then on Block Labs, we build and partner with some of the leading tokenized networks and applications. So we build a connective tissue, and then we actually build these new networks. I started this space as an investor over 5-6 years ago, investing in some of the best entrepreneurs and technologists in the space, built a great network. But I love building companies, and so my co-founder and I, Jeff Garzik, built Block 2.5 years ago. And then lastly, also serve as chairman of the Chamber of Digital Commerce. So if you believe in these new tokenized money layers, identity layers, etc., regulation comes into play. Certainly today from an institutional adoption level. And so if you care about this space, you need to spend time to kind of help that dialogue improve. This technology moves way faster than folks in DC and elsewhere. So.
And the project that we're working on, Silicon Angles, we've tokenized our media platform, and we're opening it up to a token model and to kind of change the game. And so all three of us have projects. We want to put those in context. We build everything on Amazon Web Services, so we have a view of the cloud. We also cover it. The cloud computing market is booming. We see that Amazon's Web Services numbers continue to power the earnings for Amazon as a company. Obviously, Apple's $1 trillion valuation. Those are clear case studies. But blockchain potentially could disrupt it all. And Al, I want to get your thoughts, because even today in the news, Microsoft Azure, which is their big cloud provider, announced blockchain as a service. And folks that are in either the data center business or in cloud know the shift that's happening in the IT world. But no one's really connected the dots on where blockchain intersects and also is it an opportunity for the cloud guys, and what's the landscape look like. So what's your thoughts on that, and how are they connected? What does it mean? How does a cloud company maintain their relevance and competitiveness with blockchain?
Well, just pointing on the fact that today we had that news with Microsoft and the Azure Cloud and their support and evangelism for blockchain. A company, I think it's very important that this isn't an ICO, two kids in the garage saying that they're doing something in blockchain. This is a massive, multi-billion-dollar company. And in making a decision like that, it's not trivial. It's many, many departments, a lot of resources before such a thing is announced. So that's not only is it validation, but it's a leading indicator as to this trend. That this is clearly something that's important. And a lot of people, if you're not paying attention, you need to be paying attention. Including if you're in the cloud industry. Because many companies obviously do compete with Microsoft and AWS. So it may be still early, but it's not that early. In light of the news that we saw today. With that, I would say that a lot of parallels I like to kind of, if I was an infrastructure provider, I'd look at this from the standpoint of the emergence of Linux when it first came on the scene. What was important for companies like Red Hat to be successful, they had competition at the time, and you had shortages of Linux, let's say engineers and what have you. And so a company like Red Hat built a business around that. And they did that by how they kind of surfaced and validated themselves to the enterprise of that era, was partnering with hardware companies. So it was Intel, IBM, and then Dell, HP, and they all followed. And then all of a sudden, which version of Linux do you want to use? It's Red Hat. You're paying for that support, you're paying Red Hat. Then they had their hockey stick moment. Today, it's not about hardware companies per se, it's about the cloud, right? So the cloud is the new hardware per se, and many enterprises obviously are looking at cloud computing companies and cloud computing providers, infrastructure providers, as the company that they need to support them with the infrastructure that they use. The technologies that they use, right? Because they're not necessarily supporting these things and making sure that they're always on within the basement of that enterprise. They're outsourcing, they're depending on these managed IT providers. And so it's very important that whatever technologies they're using in the lab, that ultimately their infrastructure partners are able to support the implementation, the integration, the ongoing support of these technologies. So if you think of blockchain like an operating system, or a database technology, or whatever you want to call it, it's important that you're able to really identify these key trends and be able to support your customer and what they're going to need. And ultimately for them, they can't have a clog in their digital supply chain, right? And so it's clearly emerging. Microsoft is validating that today. Clearly they have the data that they're seeing from their existing enterprise customers, and they don't want to lose them.
But remember when cloud came out, you and I have talked about this before many times, Al, that it wasn't easy to use. I remember when Amazon Web Services came out, it was just basically, it was hard to command line, basically, you had to use it. So it became easier. Now it's so easy and consumable. Blockchain, similar growing pains, but we don't want to judge it too early with the opportunity that it has. It's going to get easier. In your thoughts? And it has to scale as well, by the way, Amazon, at large scale. So blockchain has to scale and be easier. Your thoughts?
Another kind of way to think of it is to not necessarily think of cloud computing, but the evolution of the internet went, in Internet 1.0, we went through this dial-up modem era. Things were very raw back then. Great visions we had of the future. Like it's going to be amazing for video one day, but not during the dial-up modem era. And it eventually happened. And user interfaces improved, and tool sets improved, and so forth. Fast forward to today, we have all of that innovation to leverage. So things will move a lot faster with blockchain. It did start very raw, but it's moving much faster than anything we've seen, definitely in the 90s and in the last decade. So that's just, it's a matter of moments, not years.
And I think Al brings up a great point on leverage, because Amazon has leveraged its infrastructure to a point where it's larger than Google, Azure, and IBM's public cloud combined. And so you got massive leverage there. And so when these big cloud providers provide this blockchain as a service, it is instrumented and built on top of their existing infrastructure, not necessarily on blockchain infrastructure. So it's an interesting dynamic where they're putting it on top of existing infrastructure that's there. But what's being built right now is a decentralized Amazon Web Services. So you have every layer of Amazon being reimagined, like and incentivized. So you have distributed compute and access and storage and database. And so what will be interesting to see is that given this massive opportunity, will Amazon and some of these other incumbent cloud providers become the provisioning networks of the future of all this new decentralized resources that get, again, if you want storage, you have to start having smarts to say, if I'm going to go to Sia, Filecoin, or Gennaro, or Storj, compute, etc., you have to start being a provisioning layer on top of that to kind of make that blockchain essentially work. So it'll be interesting to see that transition, because today the lightweight version is to say, yeah, I have a blockchain as a service strategy, and that's like well done and check the box. Now the question is, how far in this new world will they go down? And as it gets more decentralized, as universities and governments, corporations plug their excess utility into these networks to see how that changes. That is much bigger than the Amazon today.
I think that's an interesting point. I want to just drill down on that, if you don't mind, because I think that's a fundamental observation, that every layer is going to be decentralized. The questions I think I'm asking and I'm seeing is, how does it all work together? And then what's the priorities? And the old model was easy. Got to get the infrastructure, got to get the servers, and you work your way up to the top of the stack. What cloud brings also is that a software developer can whip up an application, maybe a D-app on a test network, and go viral, and next thing you know, they have a great opportunity, and then they got to build down. So the question is, what are you seeing in terms of priorities on stacks, portions of the stack that are being decentralized and tokenized? You see patterns, trend? As an investor, is there a hotter area than others? How do you look at that?
Well, I think it's in motion right now. It's, like I said, every layer of AWS is getting thought through on how to create these digital cooperatives. I have excess storage. I'm going to contribute it to this network, and I'm going to get paid in tokens when a user uses that storage network and pays for it in those native tokens. And so that, coupled with all the other layers, is happening. From a user perspective, we may not want to be going to pick a database provider, a storage, a compute, etc. We're likely going to say, I want a provisioning layer, and provision this and execute this. Much like if we, there'll be new provisioning layers for moving money. I don't care if it routes through Lightning or Litecoin or Doge or whatever, as long as the value gets across the pond, or the app gets provisioned appropriately based on time, security, and cost, and whatever other tenets are important, then that's all I care about. But given the depth and the market for all that, I think it'll be interesting to see how these are developed with the provisioning layers. And I would think Amazon or Azure, the future of that is more provisioning than actually going and doing all that at the end of the day.
That's great. I want to get your thoughts, guys, on innovation. My good friend Andy Kessler wrote an op-ed in today's Wall Street Journal around an article on the government, the U.S. government getting involved in this Twitter, Facebook, the big platforms in terms of how they're handling their media. But he brings up a good point that with more regulation, there's less innovation. You mentioned some things outside the United States. It's a global cloud. Clouds operate globally with regions. It's a global fabric. Startups are really hot in this area. So how do you view the ecosystem of startups in terms of being innovative? Are there things happening that you think that are good and things that aren't good? Obviously, regulation, I'm not a big fan of government getting involved in managing startup ecosystems, but blockchain has a lot of alpha entrepreneurs jumping in. You look at all the top ventures, the legit ventures. They're all alpha entrepreneurs, multi-time serial entrepreneurs. They see the opportunity and they go for it. Is the startup environment good? Is there enough innovation opportunities here? Your thoughts on the opportunity to be innovative?
Yeah, Al and I were just talking about this before the panel here, and we're talking about our travels in Asia, and when we go there, it is 10, 100x of energy and get it factor and capital, and the markets are just wildly more vibrant than going to some of the typical pockets here in San Fran and New York. It's in North America, and so it's interesting to see that when you heat map the world, what's really happening, and you know, people are always saying, oh, this fintech or insurtech or whatever tech is going to make a dent in Silicon Valley or Wall Street. This technology, this new frontier is definitely going to do that. I think some of that will get put into more focus based on regulation, and there's two things that will happen. There's obviously a lot of whippersnapper countries that are promoting a safe place to innovate with crypto. I think Malta, Gibraltar, Barbados, etc.
And Barbuda's getting into the mix now.
Yeah, I mean, so there'll be no shortage of that, and so and obviously this ecosystem outpaces the pace of regulation, and then we'll see like the U.S. doing something, or you know other fast followers to try and catch up and say, hey, we're going to do the Cryptocurrency Act of 2022. Miners get free power, tax-free, you know, crypto trading, you know, just to try and play catch up. Because it's kind of hard in the last year, 18 months, of seeing this ecosystem go from this groundswell to this now institutional discussion, and how do you back end the banking, the custody, all these form factors that are still relatively absent. And so, you know, we're right in the middle of it.
It's a whole new way. You got to follow the money, right? Al, you and I talked about this. Capital markets.
Yeah.
You know, entrepreneurs need to raise money, and that's a good thing. You need to get capital to do stuff.
Yeah, this is a new phenomenon the world has never experienced before. It's awesomeness when it comes to capital formation. And without capital formation, there is no innovation. Right? So the fact that more capital could be raised, it's the ultimate crowdsourcing in such an efficient period of time, capital being able to, the ability to attract capital from various different corners of the world and deploy that capital to try to fuel innovation. Of course, you know, not all startups or what have you succeed, but that was true yesterday, right? And, you know, 90% of startups fail, but they all were given some meaningful amounts of checks, and people were employed, and innovation was tried. And every once in a while, something emerges that's amazing. If you can do that faster, right? We have the opportunity to produce more and more innovation, and of course, you know, with something so new as cryptocurrencies and things like ICOs and what have you, people may kind of refer to it as the Wild Wild West. It's not. It's an evolution. And you have
It's still the Wild West.
well, it is, but you know, we're getting better at it, right? As a world, this isn't the Silicon Valley community getting better at venture capital, or some other part of the United States or Canada getting better at venture capital. This is the world as a whole getting better at capital formation.
Yeah, that's a great point.
A new way of capital formation.
I want to just get an observation on that. I moved to Silicon Valley 20 years ago, and I love it there. You know, for venture capital and doing startups, it's the best place in the world. And I've seen people try to replicate Silicon Valley. We're the Silicon Valley of Canada. We're the Silicon Valley of the East or Europe. And it's always been hard to replicate because it was a venture model. And you needed venture capitalists, you needed money, you needed community, the culture of failure and starting over and just, you know, getting back on the horse kind of thing. Crypto is the first time that I've seen the replica of that Silicon Valley dynamic in a new way, because the money's flowing and there's community involved in crypto. Crypto has a big community aspect to it. Do you guys see that as well? I mean, I'm seeing outside the United States a lot of activity. Is that something that you're seeing?
The first time we saw, well, last time we saw everybody trying to replicate Silicon Valley was the first internet. You know, there was Silicon Swamp, there was Silicon Alley, there was Silicon this, and every city was a Silicon version of something. And then the capital evaporated, right? We had a mass correction happen.
Yeah.
What wasn't being disrupted was value exchange, right? And so this has been created now. It is now possible for this to happen, and it's happening. We're seeing amazing things, as Matt said, you know, in Asia. It's a truly awesome force. If anybody has an opportunity to go, they should go. It's unbelievable to experience it, and it really opens your eyes.
You've lived through a lot of investments during those dot-com days, and through history now, you've seen a lot of different things. Your observations of the current state of the capital formation, the startup landscapes, the global ecosystem around crypto, and how it's different from, say, venture or classic rolling up companies and those kinds of things.
Yeah, you hear a lot of this, we're in a bubble, it's speculative, et cetera. And I think when you look back at history of infrastructure, whether it's railroads, telephony, internet, and now crypto and blockchain, it's interesting, like, if you said it would take this amount of money to innovate and come out the other end of the internet with this kind of infrastructure, with these kind of applications, with these kinds of lessons learned, nobody would sign up for that number, right? It needs this fear and greed and all the effervescence of markets to kind of come out the other end and have innovation. I think we're going through a very similar dynamic here with crypto and blockchain, where everything's getting tokenized, everything's getting decentralized. Although we're talking about fundamental things like money. It's not like we're talking about pet food and women's shoes and airline tickets. We are talking about money, identity, things that will enable like other curves to really come into focus, like Internet of Things and the kind of compounding of intersections when some of these things get right is pretty extraordinary. And so, but I like what Al said in terms of capital formation and that friction to get from idea to capital to building. It's getting compressed. Yes, there will be edge cases of people taking advantage of that, but on the other end of this flow will be some amazing innovation.
What do you guys think about if you had to be pushed to answer the question with one answer, of what is the high order bit of why blockchain is so important? And for me, I see it from my standpoint, I'll just start. I see it making inefficient things more efficient for any use case that's being reimagined, which is everything from IoT or whatever. Efficiency is a big thing, at least I see that. What do you guys see as a high order bit in terms of, the one thing that you see blockchain really impacts the world in terms of impact, financial, et cetera?
Well, I think with decentralization and all these things that we're seeing, it's kind of even playing field. It's allowing for participation where parts of the world were unable to participate. And it's doing a whole lot of things in that area. And that's truly awesome, to really grow the economy, grow the global market, the number of participants in that market in all areas. I mean, that's the ultimate trend of what's happening here.
Your observation?
Absolutely. I think there's two things. There's this blockchain dialogue, and then there's this crypto decentralization, tokenization dialogue. And on the blockchain side, you have lots of companies engaging in blockchain and trying to figure out how it applies to their business, and you know, everything from McKinsey and Goldman saying financial services will save $100 billion in operating expenses by applying blockchain technology, and that's great. That is probably low in terms of what they'll save. To me, it's just not the point of the technology. I think that when you kind of distill that down to say, hey, for a group of folks to use this technology as a shared services thing to lower OpEx at trading and settlement and decrease that is great. That is a stepstone to creating these tokenized economies, these digital cooperatives. And you contribute something, and then you get something back, and it's measured in the value of this token. It's like a barometric kind of value of how healthy that ecosystem is. And so, regulated public enterprises, and you see consortiums around insurance and financial services and banking. That is all fantastic, and that gets them in the pool, gets them exercising on what blockchain is, what it isn't, how they apply it. But it's at the end of the day for them, it's cost reduction. The minute there's growth or IP or disruption on the table, they're all going back to their boardrooms to say, hey, let's do this or that. But if there's a way, my favorite class in college was industrial organization. That sounds weird, but it was. It kind of told you like how to dissect an industry, what makes them competitive, who the market leaders are, and then if you overlay like blockchain networks with tokens with incentives, interesting things could happen, right? And so that future is going to be really interesting to see how market leaders think about how to tokenize their network, how to say, no, I don't want to own this whole industrial network. I have to engage with some other participants and make sure everybody is incentivized to climb on board. So that I think is going to be more of the interesting part than just blockchainifying a workflow.
Well, let's just quickly drill down on that. Token economics, what you're getting to. So let's assume blockchain just happens. There's evolution of technology. Just assume for a second that it's going to happen in a big way. There's private, public, hybrid chains with all that good stuff happening. But the token economics is where the business value starts to be extracted. So the question for you is, how do you describe that to someone? How to look for, what are the key elements of token economics? When does it matter? When is it in play? And how should they be thinking about it?
Yeah, I mean, token economic design and getting a flywheel going to create a network and network effects is really important. You could have great technology, but Al could be a better marketer, and he gets tokens adopted better, and his network will do better because he was better able to get people to adopt and market a particular layer application. And so it's really important to think about how you get that flywheel going, how you get that kindling going on a particularly new ecosystem and get users adoption and growth. That is really hard to do these days because some people don't even know what Bitcoin is, let alone to say, I'm going to tokenize this layer, and every time you contribute, every time you take an action, you're going to get rewarded for it, and you're going to share the value of this network.
Can you give a good example of what's happening today that you can point to and say that's a great example of token economics?
Well, you see, I mean, the most basic one is shared file storage, right? It's like the Filecoin Gennaro model where you contribute the unused storage in your laptop or your university data center or corporate data center, and you say, I'm going to contribute this, and when it's used, I get these tokens, and at the end of the day or week or year, you see what these tokens are worth, and was that worth your contribution? And so as these markets develop and as utility develops, we'll see what that holds.
Al, you got an example you can share?
Yeah.
Digital bits is a good use case.
Actually, I'm not going to use digital bits, just neutral. This is one that Matt will know very well, definitely better than I, but one that I think the simpler something is, the easier it is for people to understand, and it's like, oh, that makes sense. Binance is one that's very simple. It's a payment token. If you pay with some other currency, you pay price X. If you pay in the next few years with their token, you'll get the service at a discount. And in addition to that, they're using a percentage of profits. I think it's every quarter to buy back ultimately up to 50% of tokens that are in circulation. So, it's driving value, driving return in essence, if I can use that word. So for a user, it's simple to understand. For someone that likes to speculate, it's easy for someone to understand in terms of how the whole model works, right? So it's not some insanely complicated mathematical equation that we can trust the math. And so in some cases, some adoption is going to just be will attract participants based on simplicity. In other cases, the math is important, and people will care about that. So, not all things are necessarily equal, and not necessarily one method is right. But there are some simple examples out there that prove to be successful.
That's awesome. One last question before we open it up to anyone who has any questions. If anyone has any questions, they want to come up, grab the microphone and ask the three of us if you have anything on your mind. While you're thinking about that, I'll get the final question for these guys is, a lot of people ask me, hey, I want to be on the right side of history. What side of the street should I be on when the reality comes down that decentralization, blockchain, token economics, decentralized applications becomes the norm and that reimagining actually happens? I don't want to be on the wrong side of history. What should I be doing? How should I be thinking differently? Who should I be following? What should I be paying attention to? How do you answer that question?
I think at the basic level, turn off your phone, lock your door, and study this technology for a day. It's the best advice I could give. Two, buy some crypto. Once you kind of have crypto on your phone and your wallet, something changes in your brain. I think you just feel like
check the prices every day.
you lose a lot of sleep. And then after that, I think you start engaging in this space in a very different way. So I think starting small, starting basic is an important tenet. And then what's amazing about this space is that it attracts the best and brightest out of industry and law and government and technology and you name it. And I'm always fascinated with the people that show up and they're like, yeah, I've been a 20-year veteran in this space, and I want to get into blockchain. It just attracts some of the best brains, and I think we're going to see a lot of experience coming into the space. This has been what I'd say a bottoms-up groundswell of crypto and blockchain and the evolution of the space, and I think we're starting to see some more mature folks come into the space to add some history and perspective and be helping the build out of this and the build out of these networks. And I think that the kind of intersection of both is going to be very healthy for the space.
Al, your thoughts?
Definitely agree with Matt. Definitely to lock yourself up and just try to absorb information. Everyone has access to the internet. There's plenty of information. If you don't like to read, go watch a few YouTube videos and just people explaining this stuff. It's really fascinating. There's various different use cases and so forth. You definitely have to buy some. Whether it's $5 worth, just go through the whole experience of being able to trade something of value that a few years ago didn't exist. To be able to trade it for something else of value is a pretty phenomenal experience. Then try to go buy something with it. It's even more of a fascinating experience. You just bought something that used, again, something that didn't exist a few years ago. But what I would add to that as well is you really have to get out there. If you keep surrounding yourself with people saying, oh, this is whatever, it's crazy, it's for criminals and all that fun stuff, you're going to be last place. And so coming to conferences, obviously Futures Conference is going to be a lot of interesting, great people, and that consistent experience, you'll learn something every time. At the end of the day, I remember, and I'm sure all three of us remember, with the birth of the internet, there was many people that said, the internet thing is crap, it's for kids, And we had first movers, we had the willing followers, and then the unwilling followed. You don't want to end up being the unwilling. Yeah.
All right. Does anyone have any questions they'd like to ask?
Okay, come on up. Do we go up there? Yeah.
Recordings want to get it on film.
Oh, wow. Not close and personal,
So I have two questions. The first one is for you, Al. 2 years ago, I interviewed with IIX before it was Consul, and I want to know why you didn't hire me. No, I'm kidding. That's a joke. Actually, I thought each of you brought up some good points, minus you, Al. But what I really wanted to ask you guys is, so you talk a lot about this, the tokenized economy and kind of the roadmap and the things to get there. You talk about settlement layer, right, fiat to crypto settlement layer, your identity protocols, your dApps, XYZ, right? The whole Web 3.0 stack. I want each of you, or I want at least an input from both of you, all of you. What are the hurdles to getting to a full adoption of a Web 3.0 stack, and make a bold prediction on the timing before we have a full Web 3.0 stack that we use every day?
That is a awesome question, actually. Timelines. You could be, being in technology, being in venture, you could be right, and you could be off by 3, 5, 7, 10 years and be still wrong, right? And then at your retirement dinner, you could say, hey, I was right, but I wasn't right. So this is really hard technology in terms of building systems that are distributed, creating the economic models, the incentive models. It takes a lot to go right in the intersection of all this. But it's not a question of like, is this happening? No, this is happening. This is like, it's in motion. The timelines are going to be a little elusive. I'm way more pragmatic. I was one of the early guys in the early internet, and everything was going to be .com and awesome and fantastic. And but the timelines were a little elusive then, right? It's like, when was people were thinking of today's Amazon was going to be the 2005 Amazon. It's like that took about another decade to kind of get there, right? And people could easily just buy stuff in a drone, or a UPS guy would just deliver it. And so similar things apply today. And at the same time, we all have a supercomputer in our pocket, and so it's a lot different. At the same time, we're dealing with trusted mediums, right? The medium of money, the medium of identity, all these different things. They're things that if I say, hey, download Instagram and let's share cat pictures or whatever, it's not a big deal. Our trust is really low for that. Let's do it. For money, it's a different mental state. It's a different dynamic, especially if you're an individual, a government, or an enterprise. You go through a whole different adoption curve on that. So, it is at grand scale. It is 5 to 10 years, right? In any meaningful way, and so we still have a lot of work to do.
My answer to that question is a good one because your question was a good one. My answer is a little weird because it's multi-generational.
I was about to say generational.
The first generational pivot was when the internet was born. It was because of standards, right? The government had investment. The OSI model, Open Systems Interconnect, actually never happened. The 7 layers didn't get standardized. Only the few key ones did. That created a lot of great things. And then when the web came out, that was very interesting protocol development there, the TCP/IP stuff. I mean, the HTTP stuff. I don't see the standardization happening because cloud flipped the stack model upside down because Amazon, these guys, let the software developers drive the value. It used to be the infrastructure drove the value of what software could do. Then software became so proliferated that drove the value of the infrastructure. So the whole cloud computing equation is making the infrastructure programmable for the first time, not the other way around. So the cloud phenomenon is all about software driving the value, and that's happening. So it's interesting because with blockchain, you can almost do levels of services in a cloud-like way with crypto, with blockchain and token economics, and have a partial stack. So I think that this whole Web 3.0 might be something that no one's ever seen before. So that's kind of my answer. I don't really know if that's going to be right or not, but just looking at the future, connecting the dots, it's probably not going to look like what we've seen before. And if the cloud's an indicator, it's probably going to be some weird-looking stack where certain sections are working, and then evolution might fill in the other one. So I mean, that's my take. But standards will play a role. The communities will have to get involved around certain things, and I think that's a timeless concept. Timing. I think it's going to be pretty quick. I think if you look at the years it took for internet and then the web, everything's being compressed down. So I think it's going to be much shorter. If it was 20-year cycle in the past, that gets shortened down to 15 with the internet, and this could be 5 years. So 5 to 10 years. That could be the impact in my mind. I mean, the question that I always ask is, what year will banks no longer be involved in anything? Is that 20 years or 10 years?
Or what is their role?
Exactly. So, follow the money.
So I would say that in terms of trying to keep your finger on the pulse with things and how you kind of see things evolve, things are definitely moving a lot faster. In the past, I would you'd probably say 7 to 10. I'm not sure if I would say 5 to 10. It definitely feels to me that it's 5, max, that we start to see some of these key things that fall into place. So,
what's your answer to the first question?
what was the first question?
Why didn't you hire me?
Oh,
I'm kidding. That's a joke.
We've met before. Sorry.
We haven't.
I have a question. This is Dave Vellante, co-host of theCUBE. And I want to pick up on something, John, you just said. And Matt, you were talking about Goldman Sachs and Morgan Stanley. It's not about them saving hundreds of millions of dollars. It's really about them transforming businesses. So, and John, you just asked the question about banks. I want to actually get your answer to this. Will traditional banks, in your opinion, lose control of payment systems, notwithstanding your bias?
Yeah, I am definitely biased on this, but I mean, I've been in front of the C-suite of banks, credit card companies, etc., and I said, that in about a decade, the center of what you do and how you make money is going to be zero. And because there will be networks and ways to transmit money that'll be by far cheaper, or will be subsidized by other networks, meaning, and those networks are Apple, Amazon, Alibaba, Tencent, whatever networks that are out there that are engaging in collaboration and commerce and everything else, they will give away payments as just a courtesy, like people give away messaging or email or something, as a courtesy to that network. And we'll harden that network, and it'll be built and based on blockchain technology and cryptocurrencies, so you don't have to necessarily worry about how to, kind of settle payments. But these new networks will start to encroach on banks. The banks are not worried about other banks today. The banks should be worried about these new networks that are being developed.
I have no input on the bank question.
How many people still have a home phone line? I mean, so, there's a generation of people that still like going to banks. They'll keep them in business for a while. But I think that comes to an end.
I mean, I think that when we covered a lot of the big data market when it started, the argument was mobile will kill the bank's outlets. And now with ATMs, there's more banking branches than ever before. So I think the services piece is interesting.
And also, if you look at even the cloud basis, the software as a service SaaS space, a decade and a half ago, you would ask SAP, Oracle, what have you, what's your cloud strategy? And they'd be like, cloud, that's just more efficient delivery model, not interested. 90-some billion dollars of M&A later, SAP, Oracle, et cetera, are cloud companies, right? And so if banks kind of get into that same mode to say, well, yeah, we need to play catch up and buy digital currency exchanges and multi-currency wallets and some of this infrastructure and plumbing to be relevant in the next world, that would be interesting. But I think technology companies have as much of an advantage to do that as financial services companies. So it'll be interesting to see who kind of goes into that, goes into the crypto ecosystem to make that their own.
It's interesting, we were talking before we came on, and the OSS market, operational support systems, is booming, and that's traditionally been these big operational outsourced companies would manage big projects. But if you look at in the first half of 2018, there's been greater than $20 billion commercial exits of companies through private equity mergers and IPOs around OSS. And that's where we see operational things happening. CoreOS, Alfresco, MuleSoft, Pivotal went public, Magneto, GitHub, Treasure Data, Fastly, Elastic Data Stacks, they're all in the pipeline. These are all companies that aren't cloud. They're like running stuff in cloud. So this could be a tell sign that potentially the blockchain operating market is going to be potentially a big one.
Yeah, and then even look at Bitmain, the world's largest miner in crypto. So they did about $1 billion in profit last year, did about $1 billion in profit just in the first quarter going public, just raised $1 billion last month at a reportedly $50 to $70 billion valuation in Hong Kong in the next month. And the amount of money they'll raise will eclipse what Facebook raised. And so I think the institutional, the hardware, the cloud computing, the whole ecosystem starts to resonate and think about this space a lot differently. And we need these milestones. We need these, whether they're role models or data points to kind of think about how this is going to affect your business and what you do tomorrow morning.
Any more questions from the crowd, audience? Okay, great. Well, thanks for attending. Appreciate you guys watching and listening. And guys, thanks for the conversation. Cloud and blockchain convergence. Collision course, or is it going to happen nicely, Al? What do you?
Yeah, I think it's going to be a convergence. I don't see it necessarily as a collision course.
And a lot of money to be made on this opportunity these days. And cloud convergence with blockchain.
Yeah, no, I concur with Al. I think there's going to be convergence. I think as most smarter players will engage and figure out their models in this new crypto and tokenized era.
Thanks so much, guys. Appreciate it. Give you guys a round of applause.